So typically I open up solo 401ks for a mom and pop shop. Their husband and wife, they usually make around, they usually make at least $100,000 in income. Okay. And they have an S corporation. Okay. And it's really nice because you have to report a certain portion of their income as W-2 wages for reasonable compensation purposes. And for you, an added value as an advisor, tax advisor to them, is to tell them like, hey, we're running this payroll for you, but this payroll, we need to just add it. We need to start funding your retirement account. We can't just always be reinvesting in the business. We have to also invest into your future after this business. And having that additional conversation with them can really have a major impact that, hey, like, my CPA really cares about me. He's like looking out for my future, and he's telling me to do things that I don't know how to do, but he's going to help me do it. And by having, so even if you do like $23,000 for each person, husband, for the husband and the wife, right? You're doing $46,000. That covers the reasonable comp for most intensive purposes. And then you contribute that. And I usually do it as a Roth. And then after tax contributions, I want them to pay the taxes because we're at low tax brackets right now. So I want them to pay taxes, and then it grows tax free. And it's amazing advice that they don't typically get. And you tell them like, hey, you can invest this however you please. You don't have to give them investment advice, but just tell them like, hey, this is a vehicle, this is a tax vehicle. These are the limits from the IRS that are provided. You should put this money into this tax vehicle. You can give tax advice. Okay. So you don't necessarily need to give them investment advice, but you can give them tax advice on which vehicle to use. And the investment decision, you can tell them like, hey, if you are not comfortable, go talk to an investment advisor. But if you know what makes you money, definitely do it. Obviously, there are rules with self-dealing, and you don't give the money to a direct relative, whether it be your children or your parents, right? You have to, with solo 401k, you have to obviously take into consideration about UBIT. But as long as you take into those considerations, you can help them, and it's a huge added value, both you and your clients. They'll have another topic for you, and you can charge them additional fees because they're going to come to you every single year. And, hey, like, can I contribute again? Can I contribute again? I contribute again? And that way you have a more stickier client, because you're like, hey, look, they need you because of this retirement account. You're just not doing their taxes anymore. You're adding another layer.